Assalamualaikum to Madam Syairah and my fellow classmates. My name is Nursalsabila and today I would like to talk about gig economy income instability. The gig economy, which includes delivery riders, e-hailing drivers, and freelancers, offers freedom with no set hours or traditional 9 to 5 schedules. However, this flexibility comes with a big challenge, which is financial uncertainty. In this sector, if you don't work, you don't get paid, meaning your income can be very high one month and very low the next. Because of this constant unpredictability, managing your debt becomes absolutely critical. Without a proper financial plans, it is incredibly easy to fall behind on loans and monthly bills, proving that true independence in the gig economy requires smart planning. Hi everyone, today I would like to introduce you to my client, Harith bin Rosli, a 23-year-old full-time GrabFood rider in the Klang Valley for whom I am acting as a financial advisor. Harith is the sole provider for his mother who suffers from chronic hypertension and cannot work. After 3 years on the job, he wants to buy a Pro2 Azhar car to safely transport his mother to her regular medical checkups. On the surface, his average income is 2,850 ringgit a month, but financially, he is walking on a tight road. He still has 2 years left on his motorcycle loan, less than 300 ringgit in savings, no EPF for future, and zero medical insurance. As his advisor, my goal is to guide him through these vulnerabilities because if Harith gets into an accident tomorrow, his income stops, his mother loses her care, and his debts will fall out. This is a reality for many gig workers today who has the freedom to work, but absolutely no safety net when crisis hits. Harith came to us for advice on whether buying a car is a wise and viable decision, especially with the high cost of living in Kuala Lumpur. He is also deeply concerned about his future retirement savings. On the positive note, he just opened and started saving in the ASB account this month. Now, let's look at the breakdown of Harith's monthly spending to see where his money actually goes. Let's look at Harith's current financial problems as shown on the screen. First, he has an outstanding buy now pay later debt of 2,500 ringgit, which is worsening due to compounding late fees. Second, he is tied to a motorcycle loan for his Yamaha, which costs him 280 ringgit a month and has 2 years remaining. Finally, Harith has zero financial protection. He currently has no EPF contribution and no medical insurance. This leaves him completely vulnerable if anything happened to him while working.
Now, I will explain Harith's debt management and identify his financial issue. First, Harith worked as full-time GrabFood rider and earned average income of 2,850 per month. After paying his monthly expenses is about 2,117, he only has 733 left. This means he has limited money for saving or emergency. The first issue is his low remaining income. Although 733 is left, unexpected expenses such as medical bills or motorcycle repair could quickly use up this amount. The second issue is his 2,500 buy now pay later debt. Harith needs to repay it within 3 to 6 months. If he misses the payment, he will be charged a 10 ringgit late payment fee for every overdue installment, making his debt even higher. The third issue is his motorcycle loan. He still owes 720 with 2 years remaining. Since he depends on his motorcycle to deliver food and earn his income, he must continue paying the loan every month, even if his income decreases. Finally, Harith has no financial buffer. This means he does not have enough emergency saving. If his motorcycle breaks down or he cannot work for a few days, he may need to borrow money or delay paying his bills. Next, I will explain Harith's repayment strategy. The most suitable strategy for Harith is the snowball method. This method focuses on paying off the smallest debt first while continuing to make the minimum payment on the other debt. This helps Harith reduce his number of debt faster and stay motivated. In step 1, we list Harith's debt from the smallest to the largest. His first step is the buy now pay later balance of 2,500, followed by his motorcycle loan of 6,720. In step 2, Harith focuses on clearing the buy now pay later debt first. At the same time, he continues paying 280 per month for his motorcycle loan. He also pays about 417 per month towards the buy now pay later debt so it can be fully repaid within 6 months and avoid the 10 ringgit late payment penalty. Once the buy now pay later debt is fully paid, we move to step 3. Instead of spending the extra money, Harith used the 417 ringgit that was previously used for buy now pay later and adds it to his motorcycle loan payment. This increased his monthly motorcycle loan payment from 280 to about 696 ringgit. As you can see, from month 1 to month 6, Harith pays 417 ringgit every month towards the buy now pay later debt and 280 towards the motorcycle loan. By the end of month 6, the buy now pay later debt is completely settled. Once the buy now pay later is paid off, the 417 ringgit that was previously used for buy now pay later is no longer needed. Instead of spending that money elsewhere, Harith combines it with the existing 280 motorcycle loan payment. This means that starting from month 7, Harith pays 697 ringgit per month towards the motorcycle loan. Because of this larger monthly payment, the motorcycle loan is repaid much faster. Finally, in month 13, only the remaining balance of 860 is required to completely settle the motorcycle loan. The total amount repaid is 11,180 ringgit, but the biggest advantage is not the total cost, it is the repayment time. By following the debt snowball strategy, Harith becomes completely debt-free in approximately 30 months, instead of taking the original 24 months to finish the motorcycle loan. If Harith does not manage his debt properly, the first risk is failing to repay the BNPL or buy now pay later on time, which has outstanding balance of 2,500. If Harith misses a payment, a 10 ringgit late payment charges may be imposed. If he continues missing payment, additional charges can accumulate over time. The second risk involves the motorcycle loan, which has remaining balance of 6,720. Harith is required to pay 280 per month. If he is unable to make this repayment, the lender may repossess his motorcycle. This is serious because Harith works as a group food rider, and the motorcycle is his main sources of income. If it is repossessed, he may lose his ability to earn estimate 2,850 per month, significantly affecting his financial stability. The third risk is not having an emergency fund or insurance coverage. If an unexpected event occurs, such as a medical emergency with a hospital bill of around 500 or a motorcycle repair costing estimate 1,000, Harith may not have enough savings to pay these expenses. As a result, he may need to rely on new debt, making it even harder for him to become financially stable. The first short-term goal is to clear the buy now pay later debt within 6 months. This should be Harith's highest priority because paying off the buy now pay later first. It also follows the debt snowball strategy that we discussed earlier. The second short-term goal is to build a 2,000 emergency fund. Since Harith works as a GrabFood rider, his motorcycle is essential for earning income. To prepare for this, Harith should save 182 ringgit every month in a separate saving account. This emergency fund will help him cover unexpected expenses without relying on a new debt or buy now pay later. Long-term goals. Once Harith has successfully cleared both his buy now pay later and motorcycle loan, he can shift his focus to long-term financial goals. The first long-term goal is to save 10,000 ringgit to purchase a Pro Duo Azhar. Instead of taking another loan immediately, Harith should save consistently and set up automatic monthly transfer to make saving easier and more disciplined. The second long-term goal is to build retirement saving through ASB by contributing 551 ringgit every month. Saving consistently over time also allow his money to grow through compound return, helping him achieve greater financial security in the future. Next, I will explain Harith emergency fund planning, which is an important part of improving his financial stability. Based on Harith's current financial situation, as you can see, after preparing his monthly budget, Harith has identified a monthly surplus of 182 ringgit, which will be allocated to his emergency fund. He also plans to save 551 ringgit per month in SB for his long-term investment and retirement goals. So, what should Harith do with this 182 ringgit surplus? My recommendation is that Harith should consistently save the full 182 ringgit every month into a dedicated motorcycle emergency fund. This account should be kept separate from his daily spending account to avoid using the money for non-essential expenses. The emergency fund should be only used for genuine emergency related to his motorcycle, such as unexpected repair, tire replacement, battery replacement, minor accident, or emergency maintenance. This is especially important because Harith works as rider and his motorcycle is his primary source of income. If the motorcycle breaks down and he has no emergency saving, he may be forced to borrow money or use buy now pay later again, creating additional financial stress. Now let's move on to Harith's budgeting strategy. Let's look at how his money income is allocated. First, 1,420 is allocated for living expenses. This includes 240 for petrol, 120 for motorcycle maintenance, 60 ringgit for internet, 200 for miscellaneous expenses, 300 for food, 100 for utilities, and 400 to support his mother. These are his essential monthly expenses. Next is debt repayment with a total allocation of 696 ringgit per month. This consists of buy now pay later repayment and motorcycle loan. By maintaining this payment, Harit can settle his buy now pay later within 6 months and continue reducing his motorcycle loan following the debt snowball strategy. The budget also set aside 182 ringgit every month for emergency saving. This amount will be placed in a separate motorcycle emergency fund to cover unexpected expenses. Having this fund reduces the need to borrow money when emergency happen. In addition, Harit invests 551 ringgit every month to ASB. Finally, Harit maintains 300 as his current liquid asset. This cash remains readily available for immediate short-term needs without disrupting his monthly budget.
Before recommending any insurance, we need to first understand why insurance is important for Harit. Harit is a self-employed GrabFood rider, so he does not receive any employee insurance benefit. As he spends almost 10 to 12 hours on the road every day, he is exposed to a high risk of road accidents. Besides that, Harit also a sole financial provider for his elderly mother who depend on him financially. He also has a very limited emergency saving. Therefore, if an unexpected event happens, it could seriously affect both of his income and his family financial situation. For this reason, we recommended 3 types of insurance, which is medical card, personal accident insurance, and term life insurance. Our first recommendation is personal accident insurance, specifically the Etika Personal Accident Plan, with an estimated premium of 30 ringgit per month. This plan provides compensation in the event of accidental death or disability, hospital cash benefit, and also weekly compensation if Harit is temporarily unable to work due to an accident. Since Harit works as rider every day, this insurance is our highest priority recommendation. Next is medical insurance, using the AIA medical card with an estimated premium of 100 per month. This insurance covers hospitalization, surgical expenses, outpatient treatment, and annual medical coverage. It helps reduce Harit's financial burden if he needs a medical treatment because he does not receive any healthcare benefit from an employer. Lastly, we recommend term life insurance such as a Prudential Term Life Plan with an estimated premium of 70 ringgit per month. This insurance provides financial protection for Harit's elderly mother if anything unexpected happens to him. The lump sum benefit can help cover her living expenses and medical costs. Overall, the total recommended insurance allocation is 200 ringgit per month, which provide comprehensive protection while remaining suitable for Harit's financial plan. Now I will continue with the retirement planning. Based on Harit's financial profile, he is currently not making any active EPF contribution because he works as a gig worker. His monthly income is unstable, unlike the permanent employees, so he does not receive any employer retirement benefit. Therefore, it is important for Harit to start planning for retirement as early as possible. Our retirement goal is to help Harit achieve retirement fund of 480,000 ringgit by the age of 60. This estimation based on several assumptions. Harit is currently 23 years old and giving him 37 years to save before retirement. We also assume an average annual investment return of 5%. By starting early and contributing consistently, Harit has a better opportunity to build a sufficient retirement saving for his future. To achieve this goal, we recommend 3 retirement strategies. First, Harit should contribute to EPF Aisaraan, which is specially designed for self-employed individuals. It allows flexible contribution based on his monthly income while also providing government incentive. Second, after clearing his buy now pay later debt, Harit should start making a consistent monthly contribution between 100 ringgit to 200 ringgit toward his retirement fund. Third, whenever his income increases, especially during the peak season, he is encouraged to increase his retirement contribution so that he can reach his retirement target faster. Based on our projection, contributing 100 ringgit per month could accumulate approximately 210,000 by the age of 60. Increasing the contribution to 150 per month could grow to around 315,000 ringgit, while contributing 200 per month, which is our recommended starting point, may potentially accumulate approximately 420,000 per month. Finally, Harit should contribute regularly, avoid making early withdrawals unless it's an emergency, and review his retirement contribution every year. This practice will help him build a long-term financial security despite having an unstable income as a gig worker.
Harith earns an annual salary of 34,200 ringgit. After applying his eligible tax relief, which include the standard 9,000 ringgit individual relief, 8,000 ringgit for his mother's medical expenses, and 2,500 ringgit under the lifestyle relief for his smartphone and the internet bills, his total relief comes up to 19,500 ringgit. This brings his chargeable income down to just 14,700 ringgit. When we calculate the tax charge, the first 5,000 ringgit is taxed at 0%, and the remaining balance of 9,000 ringgit and 9,700 ringgit is taxed at 1%, leaving a gross tax payable of 97 ringgit. However, because his chargeable income falls below the threshold, he qualifies for a 400 ringgit individual tax rebate. This completely offsets his tax liability, bringing his net tax payable to exactly 0 ringgit. Even though Harith owes 0 ringgit in net tax, proactive tax planning is essential to maintain this status and protect his income as it grows. Here are 5 legal strategies tailored for him. First, it is strict bookkeeping. Harith must maintain all original receipts and documents like his smartphone purchase receipt, internet bills, and his mother medical receipt for at least 7 years to stay audit ready. Second, it is to invest in retirement and insurance. By initiating a self-funded retirement plan via EPF or a private retirement scheme, PRS, and purchasing medical and life insurance, Harith simultaneously builds a safety net and creates a new tax relief to lower future chargeable income. Third, it is for him to perform zakat payments. Any payments made towards zakat serve as a direct tax rebate, deducting ringgit for ringgit from his total gross tax payable. Fourth, it is to maximize lifestyle claims. He needs to ensure all lifestyle-related expenses, particularly the internet bills, are officially registered in his name to remain fully eligible for the lifestyle relief. Lastly, it is to utilize voluntary EPF contributions. Making voluntary contributions to the EPF serves a dual purpose, securing his retirement savings while maximizing his 4,000 ringgit tax relief eligibility. For estate planning, because Harith works as a delivery rider, he faces high occupational risk, frequently working 10 to 12 hours daily and often in severe monsoon weather. This increases the urgent need for structured protection. Looking at his liabilities, Harith has a total outstanding debt priority of 9,220 ringgit, primarily consisting of his motorcycle loan. These were liens that must be legally discharged from his estate before any remaining inheritance can be distributed. Because his total estate is valued well under 2 million ringgit, it is classified as a small estate, meaning it can be handled through a relatively straightforward process at the Pejabat Pesaka Kecil. To manage this, Harith's essential estate planning relies on 3 pillars. First, a wasiat or will, to appoint an executor who can settle his motorcycle loans and legally bequeath up to 1/3 of his assets to non-heirs if desired. Second, nomination for immediate financial relief, allowing direct lump sum payout from his EPF or insurance policy to bypass lengthy probate processes. Third, hibah for faster asset transfer, allowing him to give assets like his vehicle during his lifetime so they transfer immediately outside of Harith grows. Harith is a sole provider. He has a dependent mother who relies entirely on him for financial support. If something were to happen to him, his asset distribution must follow a strict legal sequence. First, debt and liability settlement. His outstanding debts, specifically the motorcycle loan, must be paid off entirely before any assets can transfer to his beneficiaries. Once the debts are cleared, the residual asset transfer takes place. The remaining value from his vehicle and personal effects like his mobile phone will go to his primary beneficiary, his mother. We have established a concrete action plan for Harith to protect his mother's financial future. He needs to prepare a simple will. This legally names his mother as the sole beneficiary for all of his personal estate assets, ensuring no ambiguity during asset distribution. Second, he must formally execute his EPF and insurance policy nominations. By explicitly naming his mother as the nominee for his future EPF savings and life insurance policies, he ensures an efficient transfer of wealth. These direct nominations mean that the fund will bypass the lengthy, complicated legal probate processes, putting immediate financial relief directly into his mother's hand.
To wrap up, the gig economy helps companies save a lot of money, but it does so by shifting all the risks onto the workers. Harith is the perfect example of this. On the outside, he makes a decent income of 2,850 ringgit, but because he is a gig worker, he has no EPF, no medical insurance, and no safety net if things go wrong. His dream of buying a Pro 2 Azhar for his mother is constantly threatened by debt and the fear of a single motorcycle accident. As his financial advisor, my goal is to help him build his own safety net. And as future financial managers, Harith's story reminds us that while the gig economy makes business flexible, it creates vulnerable workers, which a long-term risk that financial work must eventually fix. That's all from our group. Thank you for lending me your ears.